think, act, and prosper. You are now tuned into the Money Level Show.
Hey everyone, welcome back to the Money Level Show, where we think, act, and prosper. Today, we have legendary investor Jim Rogers back on the channel. We're excited for his wisdom and hopefully he gives us his guidance today because we need it in these turbulent markets today. So, Jim, how are you doing today?
Oh, I'm fine. I'm delighted to be here, Daryl. I had a terrible jet lag, so I'm a little late, but hopefully I'm waking up.
Yeah, jet lag is definitely something that can get to you, and you're also back into a whole nother time zone. From being in Singapore, right?
I am in Singapore now, but I was just in New York, so that's why I'm really thrown off. My sleep mechanism is thrown off, but you'll wake me up. Let's go.
Yeah, let's go. Let's do it. So just looking at just everything that's been happening, looking at the macro of everything, you've mentioned that you've seen this movie before, right? And so, like, as if we're watching a rerun. And so I just kind of wanted to ask you, what part of the movie are we in?
Well, Daryl, we had a long period with bad times, longest in maybe American history. And then we had a long period of good times. As you know, things went very well for a while. Now we're in that period where the Federal Reserve tried to bring down inflation. First of all, they didn't know there was inflation. They barely knew what inflation was. They got us all wrong. They got us on the wrong foot. Then it looks like, markets don't go straight up and markets don't go straight down. They go up and down and they have zigzags. That's the way markets have always worked. And so it looks like now in the markets that inflation is calming down just because that's what markets do. Oil prices go up, then they go down. Energy prices go up, then they go down. So at the moment, it looks to the central bank like things are getting better, and the central bank thinks they caused it. It's just markets that caused things to be better for a while. So the central bank has calmed down a little bit. The markets feel better because things look better. Inflation sounds better. So we're in a period where the market likes what's going on. The economy likes what's going on because they don't have terrible prices to worry about. They don't have terrible inflation to worry about at the moment. And so the market likes what's happening. Everybody likes what's happening, but in my view, we all should be very worried later this year because inflation is not over. And interest rates will go much higher before the real problems end. And I'm worried, but at the moment I'm happy. Because it feels better, looks better, sounds better.
Gotcha. So when you mentioned we had a long period of bad times, a long period of good times. Obviously, in American history, we had the Great Depression of the 30s, and then from that period to the 70s, with high inflation and high interest rates, and then we had about a 40-year decline in interest rates or something like that.
Yeah.
Is that what you're referring to with the good and the bad times? These kind of cycles that we've experienced.
There, you pick anything you want. Good times come and go, and we'll have very good times for a while, and we'll have bad times for a while. In my view, we have had since 2009 the longest period in American history without a serious recession, without serious economic problems. We never had such a long period. That does not mean we cannot have 40 years, 100 years without a recession. We never have. So in my view, we're getting very close very serious problems. In 2008, we had problems because of too much debt. But Darryl, look out the window. The debt now is the highest in American history, the highest in world history. So when we have our next serious economic problems, they're going to be very, very bad because there's such staggering debt, not just in the U.S., but especially in the U.S., but everywhere, Japan, everywhere. Debt is going through the roof, and we're all going to have to pay a price. The central bank and other people in Washington say, don't worry, we've got everything under control. I worry. I know they don't have everything under control. I know they don't know what they're doing. And I know when before this is over, it's going to be very bad.
Yeah. So kind of like, using this context of a movie, you're saying that the Fed doesn't come to save us in this movie.
I wish the Fed knew what they were doing. I wish they would save us. That would be wonderful. If there was some smart people somewhere with magic wands who could make everything okay. There may be somebody like that, but I don't know them yet.
Yeah, it seems like that magic wand is the money printer.
Well, that's their magic wand. That's all they know to do. They think when there's a problem, just print money. That's all they know.
Yeah.
Unfortunately, it's not going to be good for the world. It's going to be very, very bad. The more they print, the worse it gets, and the worse it's going to be.
Yeah, definitely. Obviously, the more money that's created, the more inflation. And so when you say that interest rates are going to go higher, how in your view does this play out with the debt levels, with the amount that the government will have to pay on the debt? We recently had the banking crisis where banks bought these bonds that were yielding zero, and then interest rates went up and those bonds were devalued. How does that play with our debt levels? Because I think in some of the things that I've read, allowing inflation to run hot can reduce the debt. So I'm wondering, how does the interest rates play with the debt that we have?
Well, to be sure you understand, yes, inflation makes the debt less valuable or less expensive because it gets the value of the debt goes down when you have a long period of inflation. So yes, it is a way in theory to help solve your debt problem. Just inflate it away. That sounds good, sounds very easy, but the problem is, like most easy solutions, it's not so easy. Nothing's so easy. So if the higher inflation we have, inflation throughout history ruins people. Many people get ruined. Governments have used it at times to devalue or debase their debt burden, but in the end, the people who own the debt suffer, the creditors suffer, the mothers and grandmothers suffer, the insurance companies, lots of people suffer. And so just debasing the debt, while it sounds easy, somebody eventually, there's no such thing as a free lunch. I've been looking for a free lunch all my life, and I haven't found it yet. If you know where I can get a free lunch, I need a good free lunch that's going to last a long time. I haven't found it yet. But Darryl, if you know how I can get a free lunch, a long-term free lunch, just let me know, please. Don't announce it on the show. Send me a private email.
All right, I got you. We may need to become politicians for that or something.
Well, they've got free lunch. Yeah, they always have free lunch.
Yeah.
Somebody has to pay in the end.
Yes, indeed. So I'm glad that you shared that perspective on how inflating the debt away isn't as easy. And so I'm kind of thinking, like, what I'm getting from what you're saying is that inflation is going to be around for a while, even with interest rates high. Would you say that's a fair assessment?
I know, yes, inflation is going to be around for a while. It will go up, it will go down, it will go back up. And eventually, though, it's going to go very high because we have had more money printing in the US, but not just the US, throughout the world than we've ever had in history. And I know enough history to know that that's going to lead to problems. It always had led to problems, and we're going to have them again.
Mm-hmm. Yeah, that's a hard pill to swallow, I would say. And how would you say for the average person how to navigate these types of dynamics coming forward? I was just looking at some statistics right before you got on. Actually, I'm gonna pull them up really quick. But on Investopedia, it talks about the average 401k balance per age group. From age 20 to 29, the average balance is $10,500. Then you get to 30 to 39, 38,400. 40 to 49, 93,000. And then when you get to the retirement age, it's about 182,000. Which isn't enough to retire on at all. And so how does this look? It seems like we're going to be working peasants for the rest of our lives, Jim. How does this look for the average person?
Well, I'm very glad you're pointing that out, because if these are important facts, then that everybody needs to know. I wish people in Washington understood that. Yes, most of us do not have enough money for proper retirement, no matter how much we wish, but we don't have enough money because America for many years has been running on credit. And that's why most people have not faced the facts. Now, I don't know how you solve the problem, Beryl. I do know that most of us need to save more money, put more money aside to prepare for the retirement. We know retirement's coming someday. And most of us do not have enough money to have a proper retirement. Washington says, "Don't worry." Well, I worry. I'm glad you worry.
Yeah, it sounds like Washington's going to print the money.
Well, they think that they can solve any problem by printing the money. That's all they know to do, and they have done it many times in our history. And I'm afraid they'll do it again. And that we're all going to suffer.
Yeah,
the way you save yourself when there's inflation, by the way, is if you own the things that go up in price. I mean, when there's inflation, things go up in price. If you own those things, you come out okay. And for instance, if you own commodities, if you own rice and sugar and copper, and they go up in price, which means inflation, you at least survive. And you might even come out ahead if you own the right things and at the right time. But sitting around saying, "Oh, don't worry, I'll survive," is not going to work.
Yeah, definitely. And I was just seeing the other day that I think it's the reserves for the pensions, they're saying will be out or gone in about 10 years. And you have this whole battle to raise the debt ceiling and everything. I know the debt ceiling has been raised quite a few times in the past few years, and it seems like there's no end to it, and that we're really getting to the end of this rope. And so it's good to have that wisdom from you. I was going to ask you regarding oil. So you've traveled a lot. You wrote the book Investment Biker. You went around the world in a car and on a bike. I remember you told me, I think the better experience was in the car. You could sleep and everything. You're out of the rain and stuff. Recently, OPEC Plus came out and cut production. And we also see that Russia has cut production as well and are extending that until the end of the year. And so, President Biden came out and said that we're going to need oil for even longer than a decade. And so I'm just kind of wondering, what's your take on oil right now? Hey everyone, sorry to interrupt this interview, but I want to let you know about this important resource, the Rule Symposium. The link is in my bio. Be sure to click that link and check out the site for the Rule Symposium. This is a symposium that Rick Rule puts on every year. From this year, it's going to be from July 23rd through the 27th, and you're going to be able to hear from some of the best in the space. You're going to be able to shake hands with some of the best in the space. He's going to have guests and presenters such as Jim Rickards, Nomi Prinz, Rick Rule himself, and many others. And these are going to be people that have built billion-dollar businesses, people that have made a lot of money in investing in the natural resource space. So be sure to click the link in the bio so that you can check out the Rule Symposium. That is the Rule Symposium. Check it out. And I appreciate you all for clicking that link and supporting the channel in that way.
Well, first of all, Darryl, let me quickly tell you, do not take your investment advice from the government, any government, the one in Washington, the one anywhere. If you rely on the government for your investment advice, oh my, you're going to suffer badly, just like they suffer, or make us all suffer. Well, the price of oil has come down because, first of all, it went up a whole lot, so people produce more. Other people use less, so the price came down. Now, that means that the people producing oil weren't terribly happy, the Russians, the Middle Easterners, etc. So they said, we'll stop producing so much oil, we'll get the price up, and we'll all be happier. Yes, the price of oil has come down because it did go up and then down, now going back up again because they cut production. It's very simple. If there's less of something, the price goes up. And so the price of oil is going to continue to be strong. I mean, there are known reserves of oil throughout the world have been declining for a long time. You know, we had fracking for a while, but fracking, that bubble burst, that doesn't go on forever. So now the supplies of oil have come down and are coming down, and that means higher prices. But we're going to continue to have higher prices of everything because less supply means higher prices. We can deny that all we want to, and Washington can deny it all they want to. You know, in Washington, they keep cutting, they cut drilling, they cut pipelines, they cut everything. And then they wonder why the price of oil goes up. I mean, it's very simple. It's been true for hundreds of years that you cut the supply of something, the price goes higher. So oil prices will be going higher. Unfortunately for you and me and everybody else watching this, whether in Washington, they say, don't worry, we'll solve the problem. I worry. So,
Yeah,
you know, Mr. Biden, for some reason, you know, we have pipelines that transport more and more oil. But Mr. Biden says, no, we're not going to use the pipelines. If people drill for oil and there's more oil, price comes down. Mr. Biden says we're not going to drill for oil. I mean, I hope Mr. Biden knows what he's talking about, thinks he knows what he's talking about. Unfortunately, when they say things like that, when they say, okay, we're not going to drill, but don't worry, prices will come down. I don't know how they can possibly think that. I don't know how they can possibly think that if we close the pipelines, prices will come down. I mean, it's just insane.
Yeah. And I was, you know, when I recently did a video on Biden retracting, you know, the statement, well, not the statement, but statements just about, you know, not needing oil and such. And so, and now he's saying like, hey, we're going to need it longer. I just saw it as like a betrayal to his climate buddies, you know, and it seems like he may have knew this the whole time. Like that's
Well, yeah, we all want clean air and clean water and clean everything, but we also want, when we hit the light switch, we want the lights to come on. You know, we want the heat to come on. We know we need light, heat, things like that. You can't have a free lunch. I'm still looking for a free lunch. Mr. Biden seems to think he can have a free lunch. Good luck.
Yeah, for sure. So with OPEC Plus and there's been a lot of other things developing. Saudi Arabia discussing dealing oil, selling oil, I think in the yuan, Brazil and China making, agreements. You have the Brics nations and such. Is this a concern, that we should have regarding this? Is this, you know, I mean, I keep thinking about like, okay, we do have a lot of countries that don't like that don't like us involved in many of these deals going on. I mean, many of the OPEC nations don't like us. So I'm just kind of wondering, like, is this something that we should be concerned about, a security threat or a threat to the dollar or anything of that nature?
You definitely should be worried about the dollar. The U.S. dollar has been the world's reserve currency for several decades, but history shows that no currency lasts forever as the number one world reserve currency or medium of exchange. The dollar's been on top a long time, but unfortunately, that's changing for fundamental reasons. The U.S., we are the largest debtor nation in the history of the world. And that makes people think, well, maybe I shouldn't use that currency anymore or use it so much. So those people have huge debts. That's going to end badly somehow. So for fundamental reasons, people are beginning to worry more about using the U.S. dollar, but for political reasons too, because in Washington, if they get angry at you, Daryl, they cut you off. And they say, okay, you can't use the currency anymore. Well, many people, even our friends, are starting to say, well, wait a minute, they could do that to us too. They could cut me off for some reason, even if they don't like me or just because they don't like me. So many people, for fundamental and for political reasons, start worrying about using the U.S. dollar. Many people in the world are looking for something to compete with the U.S. dollar. We haven't found it yet, but many people are looking. And that, of course, that just drives more and more people away from the U.S. dollar. And the more people that stop using the U.S. dollar, the worse it is for the U.S. I can remember even in my lifetime when the pound sterling was the world's reserve currency, but then everybody stopped. It just made the decline in England even worse. 100 years ago, England was the world's number one country, most powerful in many ways. But then the currency lost its status, and England is no longer the richest, most powerful country in the world. But even in my lifetime, they still were, certainly 100 years ago. And now, unfortunately, in the U.S., we're making many of the same mistakes, and more people are looking for something to compete with the U.S. dollar. It's not good for you and me, Darryl, but in Washington, they don't seem to understand that, or they don't seem to care. And by the way, I don't know what's going to replace the dollar. I wish I know. I mean, if you know, please let me know, but please let us all know. But this has happened throughout history. Nothing has lasted as the number one currency forever. Everything has changed over and over again. And it's not going to be good for you, me, our kids, or the country, or the U.S. when we move away from the dollar.
Mm-hmm. Yeah. And I'm looking at a lot of these nations are also buying a lot of gold, buying tons of gold. And I'm kind of wondering what is the future of gold in this? If nations are going to go more towards gold-backed currencies again, or whatnot. What's kind of your take on Russia, China, and many other nations? I mean, pretty much buying a lot of gold right now.
Well, yes, that's one reason is because throughout history, thousands of years, gold and silver have survived whenever you have bad times. All the old peasants like me, we have some gold under the bed, we have some silver in the closet, because we know when things go really bad, we need something to protect ourselves, and gold and silver have always done that. And I'm not the only one who knows that, and that's why you see more and more people accumulating gold and silver. I own both. I'm not buying either right now, but if there comes a big opportunity, I hope I'm smart enough to buy more. of gold and silver. If I were buying either today, it would be silver, because silver is much cheaper on a historic basis than gold. But I own both.
Mm-hmm. Yeah, and many people say, buy gold and hope it doesn't go up. And so it seems like when gold goes up, there's a lot of chaos and turmoil in the world. What do you feel like? So you were actually, investing in the 70s when gold was going up. What was the sentiment like then? And then what was the sentiment like in the early 2000s when, nearing the 08 crisis, financial crisis? What was the sentiment like around gold and just in the economy?
Well, in the 70s, we had, for a variety of reasons, mainly too much money printing, we had serious inflation, and the price of gold, for those reasons and others, went up and went up a lot. But again, most old peasants like me know that in history, gold and silver save you when prices are going up a lot. And that's why many people, including me, bought and sold gold and silver in those days. Now it's happening again. The price of gold is near all-time highs because many people see what's happening. Whether it's the Russians or the Chinese, whoever, I'm not the only one knows that we're possibly going to have serious problems down the road. And a way to protect yourself is to own gold and silver, because in crises, they've always gone up. And that's why many people, including me, own some gold and own some silver. I'm not buying at the moment, but if they go down a lot, I hope I'm smart enough to buy more, because we will have more problems. We always have, Darryl, throughout history. And whether we like it or not, when there's a crisis, gold helps you, silver helps you. They always have, because people know that that's a way to protect yourself.
Yeah, definitely. And what's your take? So like we do have a lot of silver investors, like they really view silver. Well, at least for me, like I think that silver is going to outperform gold. Not price go higher than gold, but just like the historic gold to silver ratio it's still pretty high. It's at 80-1, and I think historically it was about 15-1. And I know you've talked about silver being, one of the most undervalued assets. Do you believe that silver will outperform gold in the next, as this bull market continues to play out?
Well, yes, gold is near its all-time high. Silver is down over 50% from its all-time high. So at least on a historic basis, silver is much cheaper than gold. Now, maybe it'll always be cheaper, but it never has been. I would suspect that if I were buying either right now, I would buy silver, because on a historic basis, it's cheaper.
Mm-hmm. And what's your take on like the platinum group metals? Those haven't. I haven't seen platinum and palladium really rise. I know we had a huge sell-off in palladium. I've bought some, but I know it has more of an industrial use than being a monetary metal. What's your take on those metals?
Well, you just said it. They do have more of an industrial use for many reasons. And so if they were cheap, and I don't own either of them right now, but if somebody keeps driving them down, of course I'll have to turn around and buy some more of platinum or palladium, because if they're cheap enough, they will outperform in the future. They do have many industrial uses, and they have for years now. So yes, keep an eye out and watch.
Mm-hmm. Yeah, I'm hoping palladium does what rhodium did in the past few years, and so that's my hope.
Well, you just watch Darryl Thomas, and you can figure out what to do.
Yeah, for sure. So other commodities such as agriculture, you speak of farmers being a lot older. In Japan, the US, the average age of the farmers are pretty high. What's your take on agriculture right now? Do you still feel that it's cheap, or are you looking at that commodity now?
Well, you just said it. I mean, the the age of farmers is getting very old. The average age of farmers in America is 58 or something. In Japan, it's 66. Well, unless something happens there, we're not going to have any clothes at all. We're not going to have any food at all, because somebody has to produce this stuff, but we're not going to have any. And if they all die, the price is going to go really, really high. So yes, agriculture has not been a wildly popular place to be for many decades. I mean, more people in America study public relations than study agriculture, because agriculture has not been very prosperous for many people. So I know enough history to know that when you have a shortage of farmers, the price of farm stuff goes higher.
So yeah, so the age of farmers is going up, and which is very alarming. My parents, and their generation, the generation above them, my grandparents, they were into the farming, and then that skipped past me. Like, I didn't grow up on the farm. I grew up in the city, Oklahoma. We talked about that, Oklahoma City. And so, I didn't grow up with those skills, but it seemed like that was a natural skill for people to have, which explains why the average age is going higher in terms of farmers.
Well, I mean, these are simple facts. In Japan, which has to produce a lot of food because it's an island nation, the age of farmers is going through the roof. And unless something happens, the Japanese are not going to have any food unless they buy it from abroad. I mean, whether we like it or not, these are simple facts. You talked about you and your grandparents and the difference. Well, you don't know how to raise wheat. Well, you better learn, or you better learn how to get some, or we're all going to have problems, because we got to produce more food, or we all starve to death. Well, this has been happening throughout history. It's happening again. And farming has not been a good place to be. Nobody wants to be a farmer. Well, eventually, though, that means the farmers are going to be driving in Lamborghinis, and the stockbrokers are going to be driving tractors. And they better learn to drive tractors so they can work for the farmers.
That would be quite the sight. It would be quite the sight. I wanted to get your take on. I haven't talked to you about this particular commodity yet, but I've been kind of looking at water. I have most of my immediate family moved down to Phoenix, and I've talked to them a few times about the reservoirs and the Colorado River and such, and how it's just being depleted. And so I'm kind of hesitant to even go down that way, because who knows what that future is going to look like. And I'll hate to own a house that way, and then something bad happens to where houses really lose value. And so with the water situation there, are you seeing like opportunities in investment in water?
Well, there are huge opportunities coming in water all over the world. We all have to have water, whether we like it or not, for agriculture, to drink. We cannot survive without water. So yes, and known reserves of water continue to decline. I mean, there's water out there. We just got to find it, and we got to be able to produce it cheaply and efficiently for everybody to survive. I mean, these are pretty simple statistics, pretty terrifying statistics, because if we run out of water, that's a huge problem. I mean, China's got a gigantic water problem. They know they do. They're spending a lot of money trying to figure out ways to get more water. But it's not just China. It's a lot of places. I mean, throughout history, if the water disappears, your country disappears, or your society, or your whatever. Don't think we can survive without water, because if we don't have water, it's all over for all of us. Go where the water is, or find some water, or invest in water. I mean, I'm not just saying close your eyes and invest in water, but there are going to be great opportunities in water in the future.
Mhm. Yeah, yeah, definitely. So just as we wrap up, we see a lot of headlines about economic news, recession, and such. And so I've been me personally, I've been stuck in like this, um, kind of back and forth. I'm averaging into some, stocks, commodities, and such. But then, like, I know that this looming recession is just hanging over my head, hanging over our head, and I just wanted to get your take on recession, what happens to, equities in recession. Are you waiting until this kind of plays out to buy things cheaper? Kind of what's your take on that?
Well, I know that in recessions, things go down in price. It's pretty simple stuff. It's always happened. We haven't had a very serious recession in the longest period in American history. So when the next one comes, it's going to affect all of us. And part of the problem is it has been a long time since we had a serious recession in the US. And so the next one that comes, Daryl, well, let's go back. In 2008, we had a problem because of too much debt. Daryl, since 2009, the debt has skyrocketed, not just in the US, everywhere. Oh, Japan, Europe, everywhere. The amount of debt has skyrocketed everywhere. So it seems simple to me that the next time we have a recession is going to be very, very bad because the debt has gone up so very, very much. So I would expect the next recession to be the worst in my lifetime because the debt has gone up so much in the last 15 years. I don't like saying it, but I have to deal with reality or I won't survive either. And I want to survive. I want you to survive. I want everybody watching this to survive. So you will have to deal with facts in order to survive.
Mm-hmm. Yeah, that's good to know. So me personally, I need to build my cash position more because of this recession risk and everything. And so
well,
that's
you have to build your cash, or you have to build your positions in things that will go up in price or won't go down in price. And everybody should listen to Daryl Thomas to figure out what those things are.
Yeah. I'll try to get it right. This is not financial advice, so don't take what I say and don't take what I say as a absolute truth or whatnot. You got to do your own research, educate yourself, and watch shows like this with Jim Rogers, and so that you can pick and choose what you need to succeed for your portfolio and your lifestyle. So thanks, Jim. I appreciate you for coming on the show again, and we just thank you for your time.
I'm a fan, Daryl. Anytime. Okay. Thank you.